Well, while the markets are holding above the 10,800 mark for the Nifty, closer to 36,000 for the Sensex, it is the oil sensitives which are not doing too well. All the oil marketing companies at the low point of the day. Along with that, we have ONGC2, which has taken a bit of a knock from the top, currently at the lows of the day. And then we have MRPL2, which has moved to the low point of the day. But we're getting a rare voice. 3M India usually never speaks, but now to get a sense of their broader business outlook for India, and the recent news that royalty payments have come under scanner, as reports suggest that the government may cap royalty payments by MNCs to foreign promoters. To take this discussion forward, we have Ms. Debarti Sen, the MD of the company, who joins us on the phone line. Thanks a lot, Ms. Sen, for joining in Seasons. Greetings to you. First up, if you could tell us what is the sort of royalty that you pay to your foreign parent, and have you heard of this being capped? What if this is capped?
We're not a company that has very high royalty payments when looked at in the context of our business. First of all, good morning and greetings of the season to you and all of your audiences. So I don't think that's something that we're really worried about. We look at India as a very vibrant, thriving economy, and all of our sectors are growing in double digits. So that's really what we're excited about.
When you say it's not too substantial as a percentage of your sales, how much is it? If you could throw some numbers.
So I'll keep it at a range level rather than going into percentage. So it's been, it's roughly in that 30-odd crore level. So it's really not very dramatic for us when we look at our royalty payouts. So also we're focused on Make in India. So I think when we look at what's going on ground in India, the areas and the sectors that are growing, we're really excited with 4 of our manufacturing plants that we can meet the needs with a lot of products that are designed in India, and then, of course, a lot of products that are localized when it comes to manufacturing in India.
All right, Ms. Sen, so I just do a back-of-the-envelope calculation. I think it'll be a little more than 1% in terms of royalty. But let's keep the royalty issue aside and let's focus on business. As you just said, that you're expecting most of your segments to grow in double digits. So what's the outlook out there? Particularly, I'm just looking at the breakup. Industrials, they are the bulk of your business. Last year, I don't think it was in double digits. Going ahead, what kind of growth number you're looking at and which segment will fire the most?
Yeah, it's very interesting because last year as well as part of this year, right, it's got the GST element in it. So net of GST, all of our sectors grew at double digits. And we typically index ourselves, no matter which country we work in, we index ourselves to the growth of the economy there. So we try to grow above the GDP, typically 1.5 factor. So in India, sitting, as I always say, I'm very blessed to be the managing director of 3M in India. Sitting on ground here, that would automatically move us to a double-digit range for all of our businesses. Not only last fiscal, but also 6 months of this year, we are net of GST. We are growing well into double digits, all of our sectors. See, it depends which sector overtakes which one. So industrial is doing well, but at the same time, infrastructure, given that it has been a pre-election year going into an election year, so probably our infrastructure businesses will also be doing very, very well. Hard for me to comment sector by sector. All I can say looking back is all of our sectors grew double digits. We ended net of GST well over double digits last year. And also we added about 300 basis points to our run rate this year in the first 2 quarters.
Fair point there. You also spoke about Make in India, your focus being on India. If you could give us a couple of numbers in terms of how much of your inputs are imported right now, what percentage of your total sales, and because of the currency, there could be an impact, right?
Absolutely. So, like many of my counterparts, it doesn't matter if you're an Indian company. For a lot of folks, the full ecosystem in India is not there. And we're global companies. We look at where can we get the best raw materials, where can we get the best parts. So from where we sit now, well over 60% of our sales are coming from products that are made, converted, value-added in India. As I mentioned, we have 4 manufacturing plants, 2 in Maharashtra, 1 in Karnataka, and 1 in Gujarat. And all of them are growing very significant double digits. So we look at our growth from our manufacturing in India as going well above our growth from, total companies. So very bullish on Make in India. And I think the government has been, or all the governments that we are operating with, all of our state governments have been fantastic partners and really understand the value that companies like us bring with differentiated technology.
And 60% of your sales come from products which are made in India. That means 40% of your inputs are imported. The rupee over the last year has seen a sharp depreciation, even though it's come off its recent lows. If you could tell us the impact of currency on your margins?
You know, I wouldn't necessarily want to go into the impact of currency on the margins, because one of the things that we do as a company is we're very, very focused on our operational discipline. So we follow Lean Six Sigma as a methodology, and we are constantly looking at what can operational productivity give us. So it is a moving board, so to say. As you can imagine, given the currency headwinds that we have, which are all public, you know exactly how much the currency is moved by and thankfully gained by now with oil holding its own. It's been important for us to make sure that our operational productivity pipeline is compensating for the currency headwinds. Not all of it we can immediately, but obviously our hoppers are looking very strong. What I would like to highlight is that for a company as innovative as 3M, we will never be 80s, 90s% made in India. And why we wouldn't be is because we're constantly bringing in new technologies, right? That is really our
20% margins on the cards anytime soon?
Apologies, I couldn't hear you.
20% EBITDA margins on the cards anytime soon?
I can't comment on that. We like to be a strong, solid margin company, and I think our shareholders have been very happy with our performance. As you know, we were recognized also as a top 10 EPS company by Money Control. So yes, we are going to be hovering in the right zone for our business model.
All right, Ms. Sen, you know, a few of your shareholders would like to know what exactly is the cash in your books. And also, if you could throw some light, I think you all bought a subsidiary company for around 590 crores. What's the rationale behind that particular acquisition?
Yeah, we spend a lot of time in our annual general meeting sharing all of the information. It's public info. It's
yeah, Ms. Sen, if you could help out our viewers as well, you know, we rarely get a chance to speak to you. So we'd like to know what's the cash in your books and what's the rationale for this 590 crore acquisition. Go ahead, ma'am.
Let me talk to the cash in our books is public info, so I don't want to go into that. We have strong cash position, and I would end with that. The important part is the rationale for the acquisition was anchored on what we're seeing happening in India. I think all of you are aware of the fact that our number 2 import bill item in India now is electronics. And clearly the government, companies like ourselves, appliance companies, auto companies, they're all very, very focused on and very willing and keen to see the electronic ecosystem move into India. So big part of our bullishness was on the electronic side. The other half of our business is on power sector, which has seen significant profitability improvement and therefore investments in distribution. So those are the big chunks.
Yeah, Ms. Sen, you know, by the look of it, this acquisition is fairly important from, you know, a growth perspective, a value perspective of the company. So give us a couple of details. Where do you see taking this acquired company to? What was the revenue in the last year? Where do you see it headed?
I would refrain from sharing with you where it's headed.
All right.
We've shared a lot of details, and I think I'd just be repeating myself.
Let's try something else then. Royalty, you told us, is around 30 crores. How much of money do you spend on R&D as a percentage of sales? I'm sure you can give us that number at least.
Yes, so we hover between 4 and 5% of our sales in R&D. We have about 110 engineers on ground. We have 2 innovation centers. We drive a lot of local R&D, but also we pull from the corporate center, as you can imagine. All of our technologies that we would like to get, we can be getting from the corporate center and using them to develop more products in India. So we stay within that 4 to 5%.
All right, 4 to 5% on R&D. Ms. Sen, finally, from my end, you know, world over 3M is known for its adhesive products, but in India, the market share giant Pidilite, you haven't been able to break their mold. Any plans for the adhesive industry in India?
Actually, we follow a very different model versus, and again, you know, we respect good competitors, large competitors. We follow a very different model. Bulk of Pidilite's sales actually are focused on consumer and also white glue segment. 3M's model across the world is in pushing the finish line further. So we always focus on high-end structural adhesives. One of the elements that I have shared publicly is the Statue of Unity that went up. Has every panel that's attached, that's got RFID attached to locate the panel using 3M structural adhesives. So in high-performance environments, our adhesives work really, really well. Are we willing to and want to go after the large consumer market or the low-end white glue market? No, we're not. We operate there, but that's not really our focus.
All right, Ms. Sen, a final question before we let you go. You told me that it's public information, so I've gone into your books. You have more than 1,000 crores of cash, so that's good news. And you've spent some money on an acquisition. Any plans to give some dividend to your shareholders, or that's not part of the plan?
I cannot comment on that. What I can comment on is we will be investing in capital on ground, as you can imagine, for manufacturing facilities that are humming, thriving. So you will see that, and our shareholders are very happy to know that we're moving into capital investment cycle.
So
can't talk about dividend. We're always focused on giving value back to our shareholders.
So what kind of a capex plan, ma'am, do you have for the next couple of years then? Let's not talk about dividend. Let's wait by in case you all do decide to pay it. What kind of a capex plan for the next 2-3 years, and what kind of an asset turn can we see on that?
So I wouldn't go into the next 2-3 years. I'll stick with what we have already shared with our shareholders. We're looking for 600-odd crores of investment over the next 5 years. That's the range that we will stay in. And again, it's not an exact number. It all depends on the businesses that take off. Right now, this is the visibility we have. And I think from where we sit, we've got very solid, when you look at the fixed asset turnover ratios, we have very solid market differentiated ratios, very, very high.
How much is it?
You're not going to be able to pin me down.
All right, Ms. Sen. Thanks a lot for joining in. Wish you good luck for the future. So that was 3M India, keeping their cards pretty close to themselves. But as of now, they have fair plans for India. The key numbers that we got, 4 to 5% is their spend on R&D. That is going to stay. Apart from that, perhaps, 30 crores the royalty that they pay, and they are looking to improve their margins. And for everything else, there is public info.
And we'll get Ms. Sen shortly, maybe in the next few months, to get an update on all of that.
Whether there's dividend or not.
Whether there's dividend or not. All right. So that's about 3M India. For the time being, the markets have gone ahead, hit a century as we speak. We're 100 points higher on the Nifty. Things looking very, very good. Infosys is leading the way. Bharti Airtel as well has moved to the high point of the day. And HDFC Bank, that's moving higher. It was more or less flattish at the start of the SAR. HDFC Bank, that's the big boy in there. When that moves the index as well. Up only around 0.4%, but that's the reason why, in fact, we've seen a bit of a jump up in the last few minutes. Yeah,
absolutely. You speak about HDFC Bank, the other HDFC Limited too. That one's up about 1% as we speak, and majority of that gain has come by just in the last 15-20 odd seconds. There we have it. But we'll keep an eye out on individual stocks. The market remains on our radar continuously at the high point of the day. Slip into a short break, come back, we discuss that.